The 100th day of Brian Niccol's tenure as CEO of Starbucks. The shares are basically flat since he took the helm. They're up literally about 0.5%. And he's had his work cut out for him, facing potential union strikes, slowing foot traffic, and a value-conscious consumer. Starbucks suspended its 2025 guidance in its most recent earnings report, citing the company's CEO transition and the current state of the business. The shares are down about 6% since that warning. For a check on Niccol's progress and whether he'll be able to execute the same turnaround that he did at Chipotle, let's bring in Gregory Francfort. He's lead restaurant analyst at Guggenheim. Great to have you back, Gregory. And I'd love to think that he can take on this challenge. Is Starbucks fixable?
I'm not sure who's trying to get more done in the first 100 days between Donald Trump and Brian Niccol, but it's close.
Or whose job is harder? Yeah.
No, he's put a lot in place, and I think he's done a lot of the right things. I think suspending guidance makes a ton of sense. It gives him a lot of breathing room and flexibility to execute what he thinks are the right strategies for the brand. But there are some headwinds. I mean, coffee prices are up 75% over the last 12 months and have risen quite sharply over the last couple months, which adds some pressure to take pricing at a time where he's trying to reduce prices and removing upcharges for dairy alternatives. So he has some headwinds, but he's also accomplished a lot.
What would you say? I mean, it's interesting for me to watch as the potential chess pieces move around. So, for instance, should he divest the China business? I think I was reading even about, was it India or something that might be on the table as well? You know, does he make this just a U.S.-centric name? I don't know if Chipotle has international locations. I mean, how big are the potential moves that he might still have to make?
China's a difficult one because if you divest it, you're selling at a point where profitability is at its low point. But you also have a ton of competition entering the market. They just hired a chief growth officer, Tony Yang, in the last week or two, and so they seem like they're focused on growing that business aggressively. We'll see, but he's made a few management changes. Michael Conway, who was a senior executive, departed the company, and he's trying to make a lot of operational blocking and tackling changes in the stores that time will tell.
How big a deal is the unionization push, do you think?
I think it's been a challenge. I mean, this is, I think, a lot of what led to a brand pushback a year ago was challenging relationships with the unions. And so it's a really difficult thing to navigate. Howard Schultz had tried to navigate it before. But this is one of the only restaurant companies. There's a lot of franchise restaurant chains out there. And so it makes it very difficult for unions to play a big role in the relationship because you're dealing with franchisees rather than the company. But Starbucks is a company-operated business primarily, and so they're having to deal with the unions. And
I like your point, too, which is, look, in order to kind of get to the scale that would excite shareholders, and you have a neutral on the stock, for them to grow units 4% over the next 5 years with positive traffic, you said the U.S. business will have to be 70 to 75% of McDonald's size. So, I mean, has it literally just topped out?
I think it's important to look at the overall coffee drinking space in the U.S. So there's 340 million Americans, about 180, 200 million drink coffee. Of that, Starbucks has about 75 million customers. So they have about 40% of the U.S. consumers touch a Starbucks. I think what they've done is they've done a really good job of bringing those customers into their loyalty program. They have about 35 million of them are loyalty customers today, and the frequency on that is higher. It's 180, 200% of a normal Starbucks consumer. And so what they need to do is they need to go broaden the tent. They need to take that 75 million customers and bring it to 85, 90, 100 million, and we'll see if he's able to do that.
Yeah, exactly. What would be your parting thoughts? If you were sitting across the table from him and you said, look, I've got a neutral on the stock, I've got a 93 price target. What would it take for the shares to get to 100 to have a 20+% return kind of year? I mean, what would that look like?
I think this company's been very focused on developing stores in the U.S. I think it needs to shift that focus to putting capital back into the operational performance of those stores that it has. And if it does so, it's going to improve the customer satisfaction. It will be able to comp, and the shares will get a healthy multiple in that scenario.
I love that he said they plan to buy 200,000 Sharpie markers as part of the effort to kind of bring the charm back.